if you can hear me and see my screen, I will begin shortly after. Phil, Fred, Bill, Michael, thank you. All right, let's see what the Discord guys are doing. There's here, okay. Discord are here. All right, welcome Discord, Yellow Tunnel. All right, welcome. And go to webinar. John, good morning, welcome. How are you? All right, then let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to pause the screen and visit this link, optionscreening.com. To understand the risk associated with trading stock and options. I'm not a financial advisor, not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or equal past performance, and you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right. The economy of control, right? We talked about process versus outcome, and the idea that you need to have a trading plan. You have to decide on how much cash do you have in your account. I propose somewhere between 30 and 50% in cash, and it's all about risk management, right? We're still trading in a trader's market. This is a time of active management versus passive management, and you have to learn how to be comfortable with being long the market and short market. Some potentially at the same time, right? Because it's very hard to time the market. You can just have more short position or more long position based on your view on the market, but you have to be kind of prepared to be long and short. Sometimes you have more long positions, sometimes you have more short positions, but you want to be able to hedge your portfolio, right? And risk management. So for that reason, I propose to not to have more than 4 positions at a time. So 30% cash if you're in soft landing. If you think we can avoid recession, and 30% cash if you think that recession is coming Q3, Q4, okay, then 50% in cash. And then portfolio drawdown is this idea of number of positions, right? I propose 4 positions and not to risk more than 2.5% of account value. How do you do that? Again, positive and negative visualizations, right? You look at the spiders before market opens, and basically model run and says, okay, 413 is support, 416 is overhead resistance, market basically neutral. We've been kind of building the top for many weeks now without making any decisive move to the upside, to the downside, right? Both narratives work well in terms of what to expect, whether it's a soft landing or hard landing, right? And earnings season kind of started. It's still no decisive breakouts. So spiders is stuck in a range. We did briefly broke through the April high, right? April high was around 412. We broke it for a couple of days, and now we're retesting it to the downside. So the model basically said 413 is your support. We're at 412. I would look at this as your overhead resistance, April 4th high. So around 411, 412, right? That's a very important support level, short term, for day trading. If we break below that level pre-market, right, or if the sell-off accelerates and we drop below 412, then we're back in the range which we've seen in the past 2 weeks. In April range, right? April range has been between 406 and 415. So short term, if you are a day trader, I would visualize that, if I have long position, right, and I'm day trading, that would probably be bearish if we trade below this level. That all it means is then we're back in this range, right, where you would sell here. You would sell here and you would buy here if you're doing short-term trading, right? So that's main support for today. So that's support number one, right? This is sell. So this is support number one, and this is support number two, right? And in terms of resistance, 415 is April high, and then year-to-date high is slightly above that, around 418. So resistance 2 is around 418, 417, 418. Call. Any questions on negative visualization? And you have to make it real, right? I encourage you to kind of close your eyes, right? Very important to meditate, right? To learn how to meditate, kind of keep all the noise out. Same thing with trading. You want to be able to close your eyes and just visualize, right? Meditation, you're visualizing you're in Florida and the wind is blowing and, the sun is shining. And that's all, and you're in that moment. When you do negative visualization, positive visualization in trading, you have to close your eyes and kind of imagine, okay, market is at 412, pre-market down 0.5%. Key support level is around this level. So visualize kind of acceleration to the downside. If we break below 412 and first 15 minutes or first half an hour, we are at 411, 410. Okay, I need to manage my short-term day trading positions, right? Because there is a risk that we can sell to 406, right? From 415 to 406, that's 2% drop. And then visualize positive, right? Let's say you're buying at 412 after you saw that we're not breaking to the downside and 412 holds. Then if you're day trading, then you're buying at 412 as long as, let's say, first 15 minutes it doesn't break. And then you're selling at 418, right? So that would be the visualization exercise, right? And then in terms of risk, whether you're holding this for a couple hours or for a couple of days, if you're not comfortable with day trading, I encourage you to use 406 as your stop loss, right? If you want to hold it overnight. So 406, again, from 414, this is 2% loss, right? 2% drop. The idea on the $10,000, you do not want to lose more than $250, right? So if you invest $10,000 in S&P and your stop loss on 406, you're down $200. I encourage you to maybe break this trade into two, right? If 412 doesn't hold, most likely 406 will hold, at least short term. Okay, so then you put half of that order, 1% at risk at 412, right? It's about, 20 shares, right? $10,000 would be 20 shares, 25. So you basically buy 10, 15 shares now, and you buy another 10, 15 shares if we do drop 406. Because the idea, you just don't know if 412 will or will not hold. Right? We have earnings season just started. Let's look at some of the movers. Yield continues to grind higher, so that's positive. We're talking about that now we're trading in a recession theme, right? When the odds of recession go down, then yield goes up. And when the recession drops, the odds of recession dropping, yield goes up. The odds of recession go, starting, then the yield drops. So as long as the yield as long as the yield continues to grind above 3.5 on 10-year yield, right? Then spiders, that should provide support for spiders in QQQ. Dollar not going anywhere, 10-year kind of fluctuating at 3.5. And then in terms of earnings, kind of mixed bag, right? United Airlines a little bit better than expected. So it's up 1.5%. Netflix, a little bit worse than expected. It was down 10% yesterday after the announcement. It basically closed the gap. So it's only down 2.5% right now. Morgan Stanley, pre-market 86.79. It was as low as 86. We do have a trade, so let's prepare for this trade. Again, negative, positive visualization. I currently have, yesterday, if you were following the earnings power trader, or if you're in a lead service, right? So if you're in a lead service or earnings power trader, then I did do Morgan Stanley iron counter. So I do have 85 put, and we are trading at 86.69. So it's about 1.5–2% away from my strike price. So I need to kind of prepare. My visualization is that market continues to drop, right? The worst case, market continues to drop, and if it approaches 85, I would sell short the stock, right? Sell short stock to defend my short put position, because short put, I'm bullish. So I need to offset it. Again, the idea of being bullish and bearish was the short stock. So for now, ideally, I want to close Morgan Stanley. If I can close it, and I'll put it for 18 cents, right? Because two things will happen, right? Going back to visualization. Either Morgan Stanley is a strong stock. People do like Morgan Stanley, right? This is like Disney or Netflix. Just like Goldman Sachs, right? Goldman Sachs yesterday, which is a similar company in wealth management, they did drop to 324 and then close the gap. So either, in terms of visualization, Morgan Stanley, it's either going to drop and continue to drop, or like Goldman Sachs, it will rebound, right? So if it rebounds after it opens in 1 minute, then ideally I just want to close the trade. So let's try to put it maybe for, looks like it's continuing to increase, so I put it for 15 cents. Right, so I'm going to try to close the trade for a profit, but not wait till Friday, right? Because it's only Wednesday. We have leading indicators tomorrow and other data, so it's very important to kind of. All right, so Morgan Stanley 86.50. Options are trading at 30 cents, 28. Okay, so I'm trying to close Morgan Stanley, and it looks like it's stabilizing. And then Abbott. So let's watch Morgan Stanley. My personal account, I also have Abbott, so I'm going to try to defend Abbott as well. Okay, now Morgan Stanley. Okay, so 85 put, trading 29 cents. So 87.57. So 25 cents. I mean, right now I can close more puts and calls and still small profit, but we'll see if it stabilizes. Any questions? Let's see. John, good morning, President. Would you wait for the close to claim break below support? I mean, yeah, I mean, I would wait at least first half an hour just to see. Voice, Faustad, Lalit, good morning. Is the voice okay? Looks like it should be working fine. So Morgan Stanley, Netflix is down 4%. It was down as much as 10%. United Airline up 2.5%. That we can, if you're in that trade, you can close. USB, you can close. Let's see, United Airline, 47. 3. Okay, so I think we got filled on Morgan Stanley. Yeah, okay, so I'm out of Morgan Stanley 85 put. Again, I mean, you can wait, right? You can wait and see if we can close the gap and close lower, but, you know, or if the spiders breaks down, right, the Morgan Stanley most likely also going to break down. So ideally, first 15 minutes, you know, you want to take the profit and, you know, move on to the next trade. Right, so I closed at 15 cents. I sold for 50 cents. 50 cents. So that was the Morgan Stanley trade. If you are in Abbott, again, I sold one. I sold 109 call. So right now, my short call is at the money. So I do see support. One way to defend it again by you know, Abbott shares, right? Maybe we can do that as a small example. So I can lock myself into you know, by maybe 50 shares, right? Maybe you know, 40 shares, but you know, a fraction of the price, right? So let's say let's see, 109.20, right? So if you do have short call, I would try to get into a cover call. You do have a support, so around 109.20. You do have support. the session low, right around 108.35. So if it does drop to 108.35, the idea is to close the short call and close the long stock if it does, if it continues to go higher. So that would be the way to hedge your portfolio, right? And I can actually get into this trade now. Option Abbott. Well, I don't want to do functions, but if you had short call, so that would be the trade. Any questions about Morgan Stanley, Abbott, Netflix? The rest of the trades, if you did do, United Airlines or Netflix, you can close them basically now. They haven't moved close to the range. Surgical is higher in earnings. Thank you, Bob, for sharing. So you have kind of mixed results, right, between Abbott and. All right, let's put an order to close Abbott. So I'm going to put an order. Sell it session high around 110. Sell. $110.10. So that's the Abbott trade. All right, meanwhile, let's go back to Abbott. So if it drops below, let's see, 15 minutes, still hasn't been 15 minutes. A session low, right? If it does drop below session low, then I would get out of the stock. Well, first get out of the short call. First get out of the short call. Short call is not moving yet. Still waiting for the short call. All right, any other questions? Okay, so let's review the other positions. So spiders for now, holding on to the support, right? We talked about, let's go back to 1 hour. Holding to the 411, 412 support, trading at 412. So that's kind of a key support for spiders. What else is interesting? Metals and miners pulling back. Down 2%. Emerging market down. China is kind of, also trading in their range. Down 1.5%. Industrials, energy pulling back. Looks like it's reached the top, kind of breaking down. He's sitting in the key support. I think we have earnings from Baker Hughes. The China Baker Hughes. BKR. It's actually up. Baker Hughes actually is up 3.5%. Okay. So XOP is down 1.5% despite Baker Hughes better than expected earnings. We have retail down 1%. Telecommunication on Netflix. Let's see. So semis continue. I would watch semiconductors, right? We're talking about, that's a leading indicator, right? Russell 2000 was a leading indicator on the downside. I would watch its support, right? Because it's close to 52-week low. Semiconductors are close to 52-week high, right? So, but it's sitting at the key support. We have, what do we have today? ASML, I think, as earnings. ASML, negative, at least as of right now, negative results to their earnings, and broke through the short-term support now, kind of approaching March lows. Important in December kind of high. So it's important support for ASML and the entire semis in general. I would watch that level. But weak semiconductors, spiders holding on. Abbott. All right, let's see. So let's look at Abbott. So first 15 minutes, it's kind of usually enough. You have 3 candlesticks to tell you where the support and resistance levels are, right? You basically can say, okay, at 108, I think that's your support, right? And your resistance at 110. If it breaks through 108.21, then Abbott kind of in trouble. It could, decelerate to the downside, right? It's kind of similar to Morgan Stanley, right? Accelerate to the upside. So stocks could reverse. United Airlines continues to trade higher. Netflix continues to trade lower. Looks like it found support at 316. But continues to be weaker. All right, let's review other positions. Sound is fine. All right. So we talked about Spider still holding for 12. We talked about dollar. Kind of not going anywhere. Continue. Trading in this well-defined range between 101 and 102, 10-year yield. All right. Let's look at the rest of the positions. All right, so Bank of America, I'm out. Let's see, Russell 2000. Russell 2000, bearish trade, right? Russell 2000 bearish trade, selling 185, 195 call spread in September. This is one of the main bear argument, right? If you're a bear, one of your bear argument is that we're sitting very close to December lows, right? Or not even that far away from October lows of last year, right? And so far rebound has been weak, right? So you have kind of A, right? Strong A, pullback, right? Strong A. So far weak B rebound, right? And if we can't break through this level, you know, then you can have wave C where you basically retest and well, first December lows and then October lows. So I'm still bearish, and I think that wave C is coming. Just a matter of time. So I do have September position. McDonald's, it's a short-term trade, identified by aggressive power trader, active trader. So far, it continues to make, outperforming spiders continues to make new highs. So I would just watch McDonald's. All right, let's look at next one. Morgan Stanley, I'm out. Let's see, is there any premium in these? All right, so let me close the short call. 2. And let's see, close the short call, and yeah, the hedges, they are worthless. Okay. NOC is trying to break through the, right, next one is NOC. It's trying to break through overhead resistance. So far, maybe just marginal, not a lot of confirmation next 8 days, right? Lucky the market had better than expected earnings. Let's see, is there a continuation? No, it looks like at least it's staying through above session high from yesterday, which is positive. Okay. So for now, NOC still long stock. QQQ, I closed the April put spread. Probably not going to put another credit put spread, right? That was a bullish position, so I'm out of it. June and September, I think I'm more bearish, especially as the earnings season accelerates, and as long as we're not making new highs and small caps are not rebounding and banks are not rebounding to their year-to-date highs, I think again the risk is to the downside. So June, September, bearish put spreads and call spreads. If you're uncomfortable trading options, one way to hedge is either SH, silver, or TLT, right? All of these are possible hedges. If the market is going to pull back, most likely TLT, bonds going to rally, precious metals going to rally, and SH is inverse ETF will rally too. And then banks, I'm still bearish. Banks and XLF so far has a very muted I mean, not completely muted, but it's not even 50% retracement. And you can see a crossover of 250-day moving average. Usually there is a follow through on the upside and on the downside. Okay. Morgan Stanley had a nice rally, very impressive rebound. And Abbott is not going anywhere. Let's see. Okay, time to. Close Abbott. So right now I'm going to close my short calls with the hope that there is a continuation. And Abbott can continue going higher. So 109.93. So see if we can reach a limit around. What do I do? So yeah, I closed the short calls if you did have it, and now you can try to close the stock. Let's see, maybe 109.90. Spiders are holding out to 412 level. Let's see. How's the healthcare? XLV. Let's look at XLV. Here's XLV. So Abbott is going to trade with XLV. So it pulled back and now rebounding. Similar price action in Spiders. All right, United Airlines is up 4%. Netflix up down 4%. Morgan Stanley is down 1%, so recovered. Most of it is pre-market losses. Abbott is at 109.25 and USB is flat. See if Spiders can stage a comeback. McDonald's is at 291. Let me see what orders I have for McDonald's. Also short-term trade, 293. So up so far, small rally. United Airlines. See if there's any overhead resistance in United Airlines. Yeah, so it's around 45 level. Any questions so far? YouTube, we do have a broadcast on YouTube of a live training room. We have broadcasts right now going on live. If you like the content, first of all, thank you for everyone who's watching live or recording. If you haven't subscribed, please click on subscribe. If any of this content is helpful, any of these videos are helpful for you to navigate current market volatility, and with expectation short-term and long-term, I would appreciate if you share it if you're part of any forum or if you're part of any social media, channels. Any thoughts on crude oil? Let's talk about crude oil. Let me see. Abbott. Let me close Abbott so I don't get too distracted. So 0.5% from 109.20 to 109.74. That's good, right? So I recovered. Oh, it just dropped. 109.66. Still quote. Let's see, 109.70. Oh, yeah, trading block now has issues. So 960, let's try it. All right, so that would, it's not mock trading in my personal account, it's actually live. And if you were yesterday at the closing bell, then some people do this. So this is an example of how you would defend the position, right? So I lost probably 70 cents on the short call, and I gained 50 cents on the stock, right? So this is an example where how you would defend the position. Right, Morgan Stanley, I didn't have to because it never got close to my strike, so I didn't do it. But Abbott, I had to do it because it did get close to the strike, right? So now I'm out of the option, and I'm going to be out of the stock. Continues to grind higher. All right, so I'm out, right? So this is a good example of how you would defend the position if the position is going against you, right? How do you defend it? Usually, right, you get into a neutral stand, right? If you short a call, okay, you buy a stock. If you're short the put, okay, you sell short the stock. And you can do this even in pre-market, right? Abbott in pre-market was not at 109, right? It was first at 107, right? So you kind of can watch the pre-market session, right? The initial reaction, it was 107, still far away. But as you approach in the closing bell, opening bell, and you have this momentum to the upside, then you have to realize that, okay, probably time to hedge. And, ideally, you can buy it actually below. You don't have to wait till 109. I could have bought it at 108.50, but you would have to have a pre-market session, and most broker dealers support pre-market session. So I think this is kind of a good example of how you would defend this position. Let's see, was Abbott part of the? Oh yeah, it was part of the. Okay, earnings power trader. Okay. So that would be an example of how you would trade this option or stock. All right, let's see. Okay. And I'm out 9 o'clock. Usually I try to 8:45. 9 o'clock is probably the best. I mean, best 8:45, but here because I got stuck and I had to wait for the support and then continuation. All right, so this is a good example. Now I have to worry about United Airlines. Okay, next. Sorry, Victor, any thoughts on crude oil? Okay, so now I'm kind of freed up. Okay, so crude oil, I mean, there's two thoughts, right? They're kind of opposite of each other. It depends on your view on macroeconomic conditions, right? I mean, you can look at the technical chart. Technical chart looks weak, right? I mean, it did broke down, but still very weak rebound, considering the reopening of China and energy crisis in Europe and better than expected economic conditions, in China and in Germany. There's no reason for crude oil to trade below 82 level, right? So if you're in a soft land and you think we can avoid the recession, then demand will continue going higher, right? As China is reopening. And crude oil can bounce to 90, some people call it double digits, 100, 110. You have to be in the mindset of soft landing, right? From chart perspective, purely technical perspective, I would only get bullish on oil if it decisively breaks above 82, which it could, right? We'll see the earnings, we'll see, some of the leading indicators. I think volatility will pick up tomorrow. We have leading indicators, right? So far, bad news is bad news, right? And so far, leading economic indicators have been bad in the past 12 months. A lot of people do watch that. Technicians do watch that indicator. So if this sell-off accelerates, you're going to have a pullback in the market, right? And then and then initial jobless claims, right? Everybody's watching, right? If you're in a soft landing camp, you think unemployment is going to stay low, right? And initial job numbers are not going to jump. But if they do, then it's, again, probability of recession increases, rates come down, market sells off. Not sells off, but, pulls back. So you do have Thursday macroeconomic data that can shed some light on the probability of recession. And then you have Friday, April, services and manufacturing, right? We're a service-based economy, 75% revenue derived from services. And so far, it's been contracting. It's still above 50, which is a win for the bulls. Again, if it drops like manufacturing drops below 50, you're going to see sell-off accelerate. Crude oil will respond. Crude oil responds to recession narrative, right? Odds of recession goes up, crude goes down. Odds of recession goes down, crude goes up. So these asset classes are highly correlated. It's not like dollar is going to go one way, yield is going to go a completely random way, and crude. They're all interconnected, right? They're all interconnected, and these divergences only last so long. So my view on the oil, I would not go bullish above 82. I doubt we're going to break through this level decisively. I think there's little room to the upside. Okay, maybe 90, but I think we're going to get to 60 or even 50 sooner than later. So my vision, if you're long crude oil, I would be a seller into the rallies. Any thoughts on such a low VIX? The only thought I have on such a low VIX, complacency, right? There's disconnect, right? If you do survey of all the institutional traders, all the hedge funds, they're all very bearish, right? There are more Vlads than bulls. I don't know who's bullish on the market. What's this guy in CNBC? He's always bullish. Whatever. So there are more Vlads out there than the opposite point of view. In institution hedge fund world, you can see on net shorts, positioning in futures, and blah, 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 blah. Retail investors, still big inflow into the equities. So retail investors, there is a disconnect, right? When you do survey of, average, retail investors, they're all bearish, right? But they don't hedge their portfolio. So there's disconnect. They're very bearish, but they're not selling their bullish positions. So that's an explanation, right? There's a disconnect. Why it's continue going lower? Well, people are not buying puts and spiders. That's one explanation. Another explanation is this invention of 0 days till expiration options. Right now, spiders, QQQ, you can trade options like binary options, right? They expire every day. And because of that expiration, that's one explanation, and it's literally half of the value, half of the options volume out there are daily, 0 days till expiration and weekly options. And because of that, kind of an artificial effect that people are not going out and people used to buy monthly options. So like, average, when 20 years when I started trading in options express, everybody says 45 days till expiration. You should buy options 45 days till expiration. Now people trade options 0 days till expiration or 5. So there's a big shift from holding these hedges long term. I'm kind of old school. I'm like, I cannot time the market, so I'm going to buy puts, in September. But majority of people say, well, I can time the market. I'm going to buy puts that expire today or Friday, with the idea that they can figure out where the market is going to be by Friday. So that's probably one explanation. And this is a bear argument, contrarian bear argument, that any negative news and retail investors are not hedged, right? They don't have QQQ puts, they don't have a SAGE, they don't have silver. They're going to get caught off guard, right? So another event like, Silicon Valley, default, and, next time, because we're not in March and April, which is bullish time of the year, we're going to be in whatever, May, June, you're going to have pretty sharp pullback. All right, any questions? I've been talking a lot, managing. So spiders are able to defend position. That's good. I'm going back to Bob's question. Like, you want to wait 50. I usually like to wait 15 minutes, right? You find some support, then bounce, and you have closing, right? That's one scenario. The other scenario, A, B, and C pattern, right? You have pretty sharp pullback, right? Gap, right? Gap. Then you have wave B. The question is there a wave C? Well, I guess it will depend. We'll see where we're going to close. We'll see at the earnings tomorrow, right? We have Tesla, right? Everybody's watching Tesla. Everybody's watching IBM earnings. So the question is there a C that will push us back into the range? Right now, too early to tell, right? Looks like for the past, it's 9 o'clock, first 45 minutes, bulls able to hold down to 412. Models, basically identified that 412, 413 is your support. So I think bears are going to have a hard time breaking it today unless something happens. But tomorrow, with new wave of earnings, that could change. Right, United Airlines pulling back. So still have short call. Let me try to close it. Nice pullback. Pushed for not, punished for not hedging, I think. Right. I mean, the bottom line, VIX is low that because nobody's buying, spider puts, right? The model derives, if people are buying hedges and they're concerned, then VIX goes up. But if nobody's buying hedges, and we had, 6 months rally, right? A lot of people think we are in the bull market, right? So, QQQ up 20%, spiders are up 20%. We've been going high. The idea that a lot of people do believe that October lows are in place and we are, in the middle of the bull market. So that's the explanation why VIX is low. Leaning more bullish and bearish. I mean, you can see from every day, Abbott, right? Healthcare, a lot of people, want to hide in healthcare. So you do have, again, exaggerated move in Abbott, right? Usually it doesn't move 6%. But because I think everybody was so bearish on their, COVID tests that they don't have that revenue anymore, you can see Abbott has moved significantly higher. So here, perfect example of why, closing the short call around 109, 120 made sense, right? Because more often than not, the support does hold when you have such a big gap, right? You have a big gap, then that first 15 minutes support holds, and then you have continuation, right? So it's good that I close the short call, close the short stop, so and minimize my losses. But in terms of earnings, TSM had a lot of negative news, right? ASML is down. Probably in my personal account, I'll do short calls. Same thing. I would do 2 short calls for 1 short put on TSM. TSM, ASML, they're sitting at these key support levels, right? And if semiconductors are going to start rolling over, the market will follow, right? Right now, small caps are already rolled over. Everybody, the best bull argument that I've heard, except that, don't fight the tape, market has been up 6%, it's up 20%, is that semiconductors are almost at, all-time high, not that far away, right, SMH, which basically usually indicates this big thrust, this big momentum that we are in, bull market, right? It recovered 62% of its losses. So if you take away that argument from the bulls, then the pullback is going to start. And TSM is sitting on this support. So, and they have been in the news, in terms of capital expenses and, reduction in revenue. Disney announced, today they're going to let go, thousands of people soon. So this is not a good price pattern. Lower highs, support, descending triangle. There is a high probability that unless they hit a home run, I'm not sure why they would hit a home run after all these pre-announcements, that the risk is to the downside. So I would either do short calls. I think short calls less risk, especially after ASML earnings, either not do puts or do 2-to-1, right? For one short put, I would do 2 short calls. That's TSM. Liquid AXP. I would have to be careful about credit cards, right? You have these large moves, healthy consumer, but uptick in defaults in credit card. Again, same thing. I think the risk is to the downside. I said the same thing about JP Morgan, right? It's funny how Todd is always here when the trade goes against me, but when it's successful, he's not here. That's very interesting. Okay. But anyway, right? So JP Morgan, I said the same thing, but, there's no indication of credit defaults, right? There's, banks actually had good earnings. That means consumer is healthy. You would assume that AXP probably has similar reaction. It's probably not going to go to 180 or 170, but it could, it could do, it could break out of this resistance, right? It's kind of this different setup, right? You have ascending triangle, right? So on the earnings, if it's similar to JP Morgan, it's obviously going to break to the upside. If it's similar to, I don't know, Morgan Stanley, right? But Morgan Stanley, it's a different business. Morgan Stanley, it's asset management, investment. People are moving their money to money market fund. They have to pay higher fees. So it's a different business model, right? American Express, it's the state of a consumer, how healthy the consumer is. And they have more weight into the corporate spending, right? Corporate spending. So I don't have a strong opinion. I would have to look. It has been volatile during earnings, right? So I would look at estimated move analysis and only do it if it warrants the risk. So I'll do it at the closing bell. Nucor, usually I don't. It doesn't pay enough premium for estimated move, so I usually don't do Nucor, and it's very volatile. DHI, also not very liquid, right? Only 500,000 shares trade. So I usually would not do DHI because it's just not liquid. And UNP, same thing. I usually don't do UNP because it's not very liquid. Only 200,000 shares traded. So low volume, right? Low volume. And wide bid and ask spread. So DHI, UNP, I'm not too crazy about it. TSM, AXP, I usually do trade. So most likely I will do either TSM or AXP, assuming it gives me enough, or premium for the estimated move. So Fred, let's remind me at the closing bell. At closing bell, I'll probably do either AXP or TSM. Probably TSM. I feel more comfortable selling short calls on TSM. I just want to see what the premium looks like. Is all things considered, we might be delta negative or delta neutral? I would be bearish, right? So delta negative. My personal account, you can see most of my positions are bearish. Right, most of my positions are bearish. Let's see how's United Airlines doing. I'm kind of gapped up, gapped down. Netflix down 3%. Abbott, strong Abbott, close to early. Right, so you do have follow through above the original session high. Right. Okay, and USB is flat. Yes, the Samsung also announced that they're spending less on semiconductors. So semiconductors, it's very interesting. Bob, will dollar have to go higher for the market to sell off? Yes, that is one of the bear argument. That as long as dollar continues going lower, market, one of the main reasons we have such a strong, rally in market since October lows, and the main reason is because dollar dropped from 115 to 100. Right, so that has a huge impact on revenue of S&P 500 companies. So for the market to sell off, dollar has to continue to rise, right? And I would watch euro. The main culprit is euro. The main reason dollar sold off is because euro had a strong rally, because everybody expected, recession and Armageddon in Europe, energy crisis, and there's no energy crisis, and the GDP is still positive, right? So euro had a strong rebound. I mean, it's basically not at 2022 high, obviously, still not there, but it recovered again the 62% space. So I would watch euro. If euro falls over and dollar starts rally, I think that will correspond with the market sell-off. Carol, thank you. Phil, yes. Yes, Scott is doing closing bell today. You're absolutely right. So just watch either Earnings Power Trader or Elite Circle, right? And I'll decide. Most likely, I will do TSM short call. For earnings trade, sorry, Fred, you're traveling. Look at the premium, right? And look at the estimated move analysis. If 2 times estimated move analysis gives you at least 30, 40 basis points, I think it's worth taking a risk. American Airline tonight in FCX was flat on earnings. Okay, Bob, thank you. All right, it's 9:25. Sorry, it took a little bit longer than usual. That's all I have for today. You guys have been great. Thank you. And I will see you, not closing bell, I will see you tomorrow morning. Thank you for participating. Appreciate it. Sorry, Alcoa. Sorry, not American Airlines. Alcoa, thank you. Phil, thank you. Fred, safe travels. Bob, thank you. John, thank you. Take care, guys. Thank you.